This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia said on Monday it will not supply gas to Europe for free as it works out methods for accepting payments for its gas exports in rubles, but G7 nations refused the demand. At a meeting of European Union leaders on Friday, no common position emerged on Russia's demand last week that unfriendly countries must pay in rubles, not euros, for its gas in the wake of the United States and European allies teaming up on a series of sanctions aimed at Russia. Concerns over security of supply were enhanced after the demand, with companies and EU nations scrambling to understand the ramifications.
US oil exports have climbed following Russia's invasion of Ukraine, and barrels of domestic oil that would typically go to the Cushing, Oklahoma, storage hub are instead being exported via the Gulf Coast, traders said. The invasion threw the oil market into disarray, as companies stopped buying Russian oil and prices skyrocketed. Worldwide buyers are looking to source crude wherever they can, and exports have risen in recent weeks from the United States, the world's largest crude producer. Cushing, Oklahoma, known colloquially as the crossroads of the oil industry, is where holders of U.S. West Texas Intermediate futures contracts take delivery.
Moving on to the top news in the energy sector.
OPEC Plus will likely stick to plans for a modest increase in oil output in May, several sources close to the group said, despite a surge in prices due to the Ukraine crisis and calls from the United States and other consumers for more supply. Several consuming nations including the United States have urged producers to raise their output by more as crude prices have surged, hitting their highest since 2008 this month at over $139 a barrel. But major OPEC members such as Saudi Arabia and the United Arab Emirates have held back on increasing their production targets, while OPEC Plus, a group that includes Russia, has steered clear of the topic of Ukraine.
India's ONGC Videsh Limited has sold at least one cargo of Russian Sokol oil to India refiners Hindustan Petroleum Corp and Bharat Petroleum Corp after failing to draw interest in a tender earlier this month, sources familiar with the matter said. Indian companies are snapping up Russian oil as it is available at a deep discounts after some companies and countries shunned purchases from Moscow due to sanctions against Russia for its Ukraine invasion. India, the world's third biggest oil consumer and importer, has not banned Russian oil imports. ONGC Videsh, the overseas investment arm of Oil and Natural Gas Corp, has a stake in Russia's Sakhalin-1 project and sells its share of the oil from the project through tenders. Next, we have the top news in metal markets. India is trying to ensure steady supplies of coking coal for domestic steel companies, the top civil servant at the Ministry of Steel said on Monday. Indian steel companies are reeling from the impact of high global prices of coking coal, used in steelmaking, after Russia's invasion of Ukraine. Indian steel companies are already in touch with Russia's coking coal suppliers, but the Indian government is also trying to help steelmakers secure supplies of the raw material, the ministry's Sanjay Kumar Singh told Reuters.
Copper bounced on Monday despite worries that spreading COVID-19 infections in top metals consumer China could hit demand, while nickel slumped in thin trade amid uncertainty about short positions in the market. 3-month copper on the London Metal Exchange (LME) gained 0.6% to $10,331 a ton by 17:30 GMT after 2 sessions of losses. The market is nervous because COVID continues to spread in Shanghai, said Ole Hansen, head of commodity strategy at Saxo Bank in Copenhagen. But the return to these levels from $10,500 last week may be attracting some bottom fishing, he added.
We will now look at the top news in the agricultural sector.
Russia kept its wheat exports steady via its Black Sea ports last week as of sea routes remain restricted, analysts said on Monday, while domestic prices for the grain continued to rally because of the recent weakening of the ruble. Western sanctions imposed on Russia for what Moscow calls a special military operation in Ukraine have complicated trade logistics and transactions in foreign banks for many Russian firms in the last 4 weeks. Export flow continues as a combination of old and newly signed contracts, said Dmitry Rilko, the head of the IKAR agriculture consultancy. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.